Good morning, everybody. It is, what day is it? Thursday? It is Thursday, the 29th. And looks like GDP just came in and came in a little bit lower than expectations. So we'll see how the market reacts to that. Not too concerned. There's a pretty decent reaction to the Fed announcement yesterday. I apologize, I haven't been doing analysis every day this week. It's just been a busy week for me. I had some doctor's appointments for my kid and just some taking some time to myself as well in the mornings. It's trading, but just doing some things in the mornings. So let's take a look though. This is the hourly chart of the S&P, and so this was that last little pullback down we had. We bought in really nicely down here, added a bunch to our long terms, bought some 3x leverage index ETFs, basically right off this red line. So you can see we caught that bottom super nicely. And then actually on this pullback, we did the same thing. We caught this, bought some more triple leveraged ETFs off of that are doing really nicely right now. So we're just kind of watching how that stuff is going. And one thing I want to point out is essentially the market has been sideways since about the 23rd. Okay, so we want to be super aware of that. You can see, we had basically this last from this swing low up to this swing high, and then we sort of attempted higher and failed, and now we're just kind of holding in that bracket. So the bracket sort of looks like this. It's from this low to this high. Some people, this is personal preference. You can draw it up to this high since that's actually the most recent high, but to me, this is a failed high. And so that's why I keep it off this. And you can see how this level has stayed sort of relevant then as the market's kind of been trying to monkey through this. And to me, this is just a rebalancing. So we had this balancing period area back here. And if we look at this, whoops, that's not what I wanted. Sorry, let's get this fixed range guy right here. And if we look at this, we had this sort of balancing period in here. And then the market kind of pulled back and sort of failed, right? Failed to go back. And now we're just sort of rebalancing, and it's up higher than this one. I think that's kind of a key thing that we want to bear in mind, essentially, is that this balance is up higher than this balance, okay? And so essentially we may just kind of coil here for a bit. We'll see. I mean, yesterday was sort of expected to be an inside day. We had that big push down, and then everything, all of our price action, basically from that push down on the 27th, all the price action has just been inside of that range. And then yesterday, it was sort of the same deal, right? So let's see, where's yesterday's price action? Here's the 28th. So let's see, the 27th, this was sort of our close, was around here, right? We bought in down here, kind of closed up here, was looking good, pushed up in the pre-market, and then pulled down. And then it was the same deal, right? Like we had this high, we had this sort of low to high, and then this push up, and then we tried to make a new high and then just sort of failed again. So same idea. This is sort of a sideways bracket that we were in yesterday. And to play this, by the way, as far as like trading yesterday, once you recognize you're in a bracket, then you're just playing off the lows and the highs. Now, this was the Fed announcement, so you can see a lot of that volatility came in. So at that point, we're not using this strategy. But when we were watching this yesterday, or when I was watching this yesterday, I should say, basically we had this up and then we kind of came down, and where this stopped was within the volume that was here. And then it just sort of became, a volume game at that point, right? So you had this accumulation down here that we then sort of pushed up. You can see we tested it, retested, and then pushed up. And then you have this accumulation up here, right? And if you look at this, what do? We came down, retested from this volume area, right? A little bit on the high end of it, but it was a retest of this volume area, and then pushed up again. Look where we rejected, right? Right off of this high volume node, came back down, and look where we rejected here, right? It was right off of this reversal zone. There was actually a lot. It's hard to see on the profile because this profile is just, I'm pulling it out farther, but there was actually more volume down here. If we look at this as, it's actually easier, I think, to look at it as one big profile. So if we do it like this, well, I guess I was wrong there. I thought this was the one I was thinking of, but I guess I was wrong there. Maybe it was down here. But regardless, um, we pulled back basically right into this volume again. You can see that the low sort of held there. And then we push back up. Where do we push back up into? So this one was here. As we came back up again, we have to look at volume areas. There's high volume from inside this consolidation. There's also high volume up here, even just right within this last sort of move here. And you could kind of take the play off of the bottom of that as well. And then we start to get into like, this tends to happen leading up to Fed minutes, right? So something to kind of be aware of on Fed days is the market tends to coil, right? So it tends to just go back and forth and start to find its balancing area. And that's exactly what happened here, right? So we went up, we came down, we went up, we came down, and then we just started to, we started to kind of coil in here. And whoops. And then usually sort of right before the announcement, a lot of times, depending on what the expectation of the announcement is, but a lot of times you'll get this sort of just grinding down as like just nobody's buying, right? This is just lack of buying because nobody's buying going into the Fed announcement. And so you tend to just have price action just sort of melt down. And then you get your Fed announcement. That's your big spike there on that candle. We don't want to trade that. Had some good moves up here. But I was tempted to buy in and go long up here. I mean, the place to do it would have been right away, but I don't like trading right away. And the reason I didn't is because, again, if we look at this, this is a giant balancing period. And when we kind of pull this out, let's just get to kind of like where we were, it's like we've got to get out of all of this mess, right? Like really, all of this is inside of this whole range. And we can see that previously way up here, there was no price acceptance, right? So until we start to see price acceptance up here, meaning this profile needs to start building either up here or ideally even a little bit above it, then you want to be really careful going long because what you're at an extreme of what is actually looking like a very normal bell curve distribution in here, right? And that is really, really important to be aware of. And you can see that as long as we're in that bell curve distribution, what are we doing? We went to the extreme. We came back down to the point of control. See how price then just coiled at the end of the day, right into the point of control. And then we come down, test the bottom area of that distribution, right? No real price acceptance down there. So we come back up through the point of control, back up to the top area. Now, the fact that we're building price action up here is usually a sign that we're going to break out to the upside. Okay, so we want to be sort of aware of that. So if I were to have a bias right now, it would be a breakout of this balancing area, a breakout to the upside, as long as we continue to generate. The fact that we're coming off of this sort of value area high, and actually this can be changed. I had that narrowed down for other purposes. This is the normal value area. So you can see we're coming right off of that value area high, and we're building value up here, right? We're pushing value up here. As long as we keep doing that, there's a good chance we break out. If we try to break out and fail, we're probably going right back through this point of control, and a breakout to the bottom of this channel could be very possible. By the way, I have this purple line here marked out as the 30-minute low value node or low volume node. That's from this whole consolidation. You see how this is our major distribution up here, and then this low volume node, and then this more minor distribution. That's from this price action right here. So that's why these lows right here are so important. That's why we came down and we tested them. That's right where we tested on that Fed announcement, because if we get price acceptance within here, then this, we could start building, right? This can hold us. So as long as we kind of stay up here and we keep this bell curve right here, we're good. Otherwise, this could still become like one giant bell curve, right? So it's not like we instantly start falling, right? This still could look like one giant bell curve. Or we could just start building more volume down here. something like that. So we just want to be aware of those possibilities. And that's kind of what I have my eye on. This level at 43.82 so far, that low volume area has rejected, which tells me, to watch for this, that we're sort of balancing in here, this sort of shorter time frame balance. But you got to keep in mind, this is a balancing area inside of a larger balancing area. So it's inside price action on a shorter time frame that's also inside of price action on a larger time frame. And that usually leads to very choppy markets, right? Because the market is definitely directionless. And until we get decision making, I don't personally like to just take blind trades on ranges, but you can look for towards the top end of these areas, you can look for confirmation for short trades. And at the bottom end, you can look for confirmation for long trades. So like yesterday, if you were trying to do trend following inside of here, you probably would have gotten chopped up. But if you took short trades, right, there was volume here that this was a long right out of, and then up here, this was a short off of this volume, and then down here, this was a long off of these volumes here, and then back up a short off of this volume, right? Kind of looking for shorts at the extremes and longs at the extremes. That's the way to go as long as we're inside of this, right? And right now, what we're kind of stuck at right now is this volume that's in here. I'm gonna have to clear some of the stuff off this chart because it's getting a little bit convoluted. But there's a bunch of volume basically in here, right? So this whole zone is sort of what's keeping us, what's keeping us right now. And it's also, you can see like this support from this volume right here. This was big volume down here. See that? That's the point of control from this big consolidation that was right around noon. So there's a lot of heavy volume price action from, basically the morning, 10 a.m. through noon. A lot of heavy volume price action through there. That's been acting as support all through the overnight session, right? It acted as support here. And then we broke through, and then again just tested the bottom side of this balancing area. So we're as long as we're in a balance area, you don't want to be looking for longs up here. I don't want to be looking for longs right now, although I am anticipating a breakout. I wouldn't take any sort of breakout trade really until we start showing price acceptance up on this larger auction, right? That's what we want to see. We want to see price acceptance up high. And same thing here on this smaller auction, right? All this sideways. We got to get out of this. If we get out of this definitively, like if price does something like this, comes up and then something like that, this would be a scenario where you can consider a breakout over the top of this because you've got smooth sailing over the top of that. I don't personally love breakout trades, but if price is moving aggressively enough, I'll take them. And so usually what I prefer is a pullback. Usually what I'd like to see, my ideal trade would be price does something like this, gives us what I call a zigzag trade, right? And then comes into this, and this is basically where we take our entry. Where's my drawing tools? Here we go. Entry would be somewhere around here. What we'd be looking for is we would draw our volume profile. There's not going to be any volume there, but my volume profile would be drawn based on this consolidation. So this is one of my favorite trading setups. I call it the zigzag trade because we wait for a zigzag in the market, and then we just capture. What I do with the volume profile is I capture the whole zigzag. So I start at the start of the push up, and I go to the top, right? So there's one market top in the middle, and I want to see where the volume is within the Z, within the zigzag, right? And wherever that high volume is within the zigzag, if it's pronounced enough, if it's not pronounced, I don't take it. If it's pronounced enough, we usually just front run that high volume area just slightly, take our trade off of that, stop under the low. I like to target 1-to-1. You can target however you want to. And that's my favorite trade setup. Those are really high probability trades, but not like, I'm not going to do that in the middle of a balancing area. If I'm not going to take a long, if it's a zigzag long, right into the top of that balancing area, that's not going to be good trade location. Same thing if it's a zigzag short, I'm not going to take it. Like you can see here, right? This was a zigzag short right here. I'll show you what I mean here. So here's our zigzag, right? You've got here, low, high, low. Okay, that's our zigzag, right? Boom, boom, boom. Let me make this so you can actually see it. Okay, boom, boom, boom. That's our zigzag. And so what we do is we take our profile and we capture the whole thing and we look for the high volume. Now you can see, this is overnight price action. So there's no volume that's particularly pronounced. There's this weird high volume right here. And you can see we kind of like pushed through that and then retested it. And you could go long off the retest because that's what happens with these areas. If you blow through, you go along off the, you just reverse and go for the retest. So this was really our high volume area that we'd be looking at. If we want to see the major point of control in there, we just do that. And what we see is that price kind of got stuck on it, but we got a little reaction there, okay? But because we're going into the bottom of a balancing area, we're bouncing off the bottom, we got price rejection off low volume, right? This is the low end of this balancing area. So we don't expect continuation down here. This is a bad place to take a trend following trade. That's what this zigzag trade is. It's a trend following setup. There's bad location for that, really bad location for that. So that's not something we're interested in. On a micro time frame, there is a little zigzag right here. Whoops, accidentally just did that wrong. There's a little zigzag right here. We went high, low, high, right, on a very micro time frame, like if you were to go into a 1 minute or something. And it's the same idea then, right? We just want to capture the zigzag. Where's the volume? It's right there. And you can see where you could go long off of. That's your trade. This is a super tiny trade. You put your stop under the low and you could take your target wherever you want to. Again, I usually just I like to be in and out, but that's your trade right there. That's the zigzag, right? That's your zigzag trade. So, taking that long off the bottom of the balancing area, coming back up towards the point of control, like if you want to take a bigger target there instead of the 1-to-1, you target the point of control. You get really good risk reward on that trade. Taking it again up here, it's a little bit dicier, right? So we have essentially a zigzag right there, right? It's the zigzag setup, easy peasy. And you can see this is kind of working. It may have actually even worked based on my risk reward. Actually, probably not quite. My stop would be somewhere down there. I'd be just under my target right now, but that's the trade setup. I personally wouldn't take this one because of the trade location. We haven't yet really broken out of this range, right? Make this a different color. We haven't yet really broken out of that green range, okay? So that's kind of what I'm looking for. I like those setups, but I like them to be either after the breakout or if you're within a balancing area, you're looking for shorts from the top of the balancing area and longs from the bottom. Once you get above the point of control, if you're above the point of control, I kind of stop looking for longs. And if I'm below the point of control, I kind of stop looking for shorts because within that balancing area, you tend to get some hard rejections and you could sometimes coil tighter and tighter and tighter and not even make it to the bottom and the top anymore. So that's what we're looking at for the day. It's just basically sideways. We're sideways since, really since the 21st or so, 22nd of July. So about a week of sideways price action. A little choppy, definitely real choppy the past couple days. And we'll see if we can break out of this one way or the other today. I'm holding on to my leveraged index ETFs. Those have been working out really well for me. And I'll probably ride the stops up a little bit. I might bring my stop up to underneath some of this price action here, depending on how we open. I want to make sure I keep some profits on that. My entry was down here. I think my stop is basically right below my entry right now. And, I'm just going to monitor that. I think we should hold above this. So that's kind of my I think we should hold above this. I'll probably move my stop below this stuff today. So that's what I got for the morning. I'll be in the trade room, dpmtrades.com. You can join us. Right now, we kind of have open access for everybody, even our free members. The only reason to do a paid membership is if you want access to some of our indicators, like these custom candles. They're not necessary. They're just sort of handy, but you honestly do not need them to trade profitably. Most of our trading is simply price and volume, and you don't need my indicators to trade price and volume. And yeah, so you can just join us. It's a great little community. It's small right now, so you can ask a lot of questions. I share my screen during my trading sessions on most days, and I give voice commentary while I'm trading. So it's a great way to follow along if you're trying to learn. And that's that, guys. So I'm going to sign off here, and we'll get ready for market open. And I'll see you guys hopefully in the trade room, or I'll check in with you tomorrow for some analysis.